WTI futures opened this session drifting higher in attempts to perhaps recoup some of yesterday's 7% losses. A lower dollar helped spur on some short covering on the opening, at least that's what consensus thinks. Also, news flow from Libya with the struggles there on output hitting 20-month lows. That was offset a bit by news flow from China in regards to COVID and fears of perhaps reimposing lockdowns in the country. Get into the bulk of our session. We had a fairly tight but volatile range. Price action pressed on the upside and the downside throughout the session. EIA report was fairly bearish. Inventories came out at a 7-month high, increased by 3.25 million barrels. Consensus was expecting a draw of 1.5 million barrels. Gasoline stockpiles up 5.83 million. Consensus was expecting a draw of about 1 million. Gasoline demand, as of last week, dropped down to a 6-month low, and distillate stockpiles increased by 2.6 million barrels. Consensus was expecting a increase of about 1.7. Refinery capacity rates, 94.9% on the week prior. That's a difference of 94.5% the week before that. And imports into the country, 6.7 million barrels versus 6.8 week prior. Going into options, I look at CME Group CVOL, looking at August, to 1 month trading about 95th percentile, on a 3-month basis to 65th percentile. At-the-money vols are moderately higher today. Skew, though, is down again as the down variance or put wing is up on the day, whereas the call wing or up variance is basically unchanged. Option volume fairly spread out, seeing volume in the 97 to 99 strikes in August, and on the put side, the 95 to 96 strikes. Lastly, WTI E-mini futures volume continues to be very strong. Yesterday we saw a volume of 36,357, open interest standing at 6,531.